So we're back with Julian Parra from Blueprint Capital. And today we'll be talking about understanding the lending system. Do you want to say just a little bit about that? Just a little introduction on what we'll be discussing?
Yeah, glad to be here on the second episode. And I would like to talk more about kind of what's behind the scenes regarding each loan. There's different types of loans, and I would like to just break it down, make it simple for people to understand. And so that's the goal for today. And hopefully we get to answer a lot of people's questions through this conversation.
Nice. I think I'm going to learn a lot too. Okay, so our first question is, a lot of people feel intimidated by financing because they don't understand how the lending system works. What do people actually need to know about how lenders make decisions?
Yeah, so really the key thing that when the bank looks at a file is really they analyze the risk. How risky is, or how successful is this loan going to be over the long run? Meaning, how likely is this borrower that's applying for this loan going to be able to continuously be able to afford and make the payment monthly? And one of the key things is really understanding the full profile of the client is what my job is, making sure that I understand how their employment is, their history, are they winning, making a stable income, and really understanding also their credit score, understanding like, have they been having late payments? Have they had, any history in the past where they've not been behind in any credit card, any loan? Any of that is important to know that up front before we move forward in the application, because then the underwriter is going to see that and can deny it. And really in the last thing is really just having some savings. A lot of people think that, yes, I can, I work and then have a dream of buying a house. But if you don't have any savings at the beginning, it's very hard for the bank to approve you, just because, even if you have a good income and you cannot show that you have some sort of savings. The savings just helps the bank know that you have, in case of something happens, you lose your job, something, emergency happens, they know that, okay, you have some backup, some reserves that can cover the payment and making sure that they're covered, right? Mm-hmm. And so that's really the kind of the key things that people should be aware of. And my goal is that even if you have a fear of getting a big loan or anything like that, my goal is to ease that process to you, making sure that, look, I can analyze your situation. Doesn't matter right now in the economy. Yes, many people think it's very difficult, but right now there's a lot of programs that they're assisting first-time home buyers. And so those are things that can ease the way on how to buy their dream home.
Nice.
And so,
what is an underwriter?
An underwriter is really like the person really that's making the decision on a loan getting approved. Okay. So I'm the loan officer. I originate the loan. Pretty much I'm the consultant that basically brings the client into the door and like telling them like, hey, this is the process to get you approved for the loan. Mm-hmm. But then the underwriters from the bank side. So they actually review everything from the application. They review every document. They look at your credit report. They're the ones who they're the detectives. They try to find every little thing that can show risk, because that's their job. The bank wants to make sure that the risk is not there. Like, you're not a risky person. You've managed your finances well. You've paid your payments on time. And so that's the underwriter's job. And to become an underwriter, you have to have experience first as a loan officer. You have to know how to originate. So eventually that's a job that people end up going into. That's a salary job plus a commission. They work under the bank. Okay. But my job is more of the front end. I'm the one educating the community, bringing them, telling them like, hey, there's an opportunity, you should apply. Or even if they're scared, like they're risk-free of applying. Now we live in a time where you could just apply for a home and, doesn't cost you anything. The worst thing they could tell you is, okay, you're not ready. Mm-hmm. But at least you applied, you give it an attempt. And then now you know how to apply for the next one or how to get an approval. And that's my goal. Like, even if you're not ready, what I do different than others is I guide them to the process to get an approval. I guide them if they need credit repair, if they need to save more money, or if they need to just establish their income, like get good work history, like don't move jobs, just given the right recommendations. So that way the underwriter, when they see it, it's a pretty much good, easy approval.
Nice. So you're like the middleman between the community and the underwriter.
Correct.
And then the underwriter directly communicates with the bank and
the underwriter is part of the bank. He makes the decision like, okay, this loan is approved. It gets to go to closing. But the bank doesn't have people like us. So that's why the business of loan officers and like real estate exists. Banks are like behind the scenes, especially there's two different types of banks, like Chase, those are the retail banks, and then we have wholesale banks. I deal with wholesale banks. Pretty much, they don't have loan officers like selling loans. They allow like small businesses that they can basically promote their bank programs for them, and then if we close, I get a commission, right? So we don't get a salary. That's the difference between me and somebody working at Chase. That's another big question there. Many people ask, well, I try to go to Chase and they're giving me a better rate. And usually you will get better rates, if you get a loan from Chase or one of these major banks. But most of them, you're working with a representative that sometimes you might never even see in person. And the other is that they only work a salary job. So they only work 9 to 5, Monday through Friday. If you have any other questions, you cannot reach out to them personally. They only answer their office phone. And I've done a loan through Chase myself. My first mortgage was through Chase, and I remember my experience, and it wasn't the happiest. After that, I was like, I'm never doing a loan again with them.
I'm doing it myself.
Yeah, I'm doing it through another bank, and it had a better experience. And so, so that's one of the also misconceptions too, that people think like, oh, well, why should I work with you more than, well, blah, blah. You can go and try to work with a bank, but you will see the experience is not really sometimes the greatest. And it's not just my personal experience. I've had other people, clients that have came from a bank and be like, oh, they didn't get approved, and they come to us, and then I analyze their file, and we're able to approve them. So sometimes some retail banks deny certain clients based on if they already see like a low credit score, they're like, they don't want to waste their time. Which is inconvenience for some people, but for us, that's why our business exists. We give opportunity. Our goal is not to deny anyone. Really, it's really to analyze their deal, and if they're not ready, okay, show them an option.
And how you get ready.
And how to get ready.
Right?
Yeah, how to be able to get approved.
Right. Oh, that's great.
So,
awesome. Good to know that.
Yeah.
Okay, let's talk a little bit about how lenders think. Beyond credit score and income, what are the biggest factors that determine whether someone gets approved or denied for a loan?
Yeah, so right now, the biggest factor to getting an approval, how you said, it's not just also the income, the credit, but it's really the preparedness of how the file, when the client applies, how prepared they are. Meaning, and that's my goal, that's what I do. I prepare the client to make sure they can get an approval, because that's the difference between, sometimes some people ask me, well, why don't I just apply myself directly to the bank? Why can't they just skip me? I'm like, well, you don't even, unfortunately, most people don't have their documentation organized. Right. So then they go fill out an application, and then they get asked all these questions, like submit all these documents, and most people don't have them. And usually the bank, when you submit an application, within 3 days, they want to see all your documents that they request, like driver license, social security card, bank statements, tax returns. Like they want to see all those documentations, because those are the documents needed to get an approval. And so if you can't provide those within 3 days, that's already starting showing red flags to the underwriter, saying like, oh, this client is not organized, or this client's not serious. And so those are other things that I oversee and make sure that I submit the loan for the client, but I submit it when I have all the documents. So when they receive it, we pretty much get an approval or denial right away. And then the client feels like confident, like, okay, we are going to be able to move forward and buying this house. Or if we're not, like, we know how to problem solve. If there's because sometimes the bank will not give a denial right away. It will be like, it's like an approval pending. So it's like, it could get approved, but we need to verify some additional documentation. And then that's kind of like where I help the client, like, okay, let's get this document, and then we resubmit, and then we get an approval. And so So I'm the main source of like guiding the client to make sure that I'm representing them in the whole process to make sure that they get the approval and they get to close. Because I get to communicate directly with the underwriter. They ask me questions on behalf of the borrower, like, hey, has this borrower had like employed the 2 years, like employment questions, things like that. And my job is to make sure, okay, answer those, verify with the client, make sure those, and for the client also to share me the full story, right? Because that's one of the other things too. Most clients don't share certain things at front. And then when I submit it and everything, and then underwriter looks at everything, they're like, oh, what happened here in 2022, 2 years from now, 3 years from now? You had a foreclosure or you had a late payment. And like all those things like in the application needs to be kind of disclosed from the beginning. When they start seeing like things like that pop up and like not disclosed, that's another reason too, like red flags, this client is hiding something, and that's all the little things that can start creating like not wanting for the lender to get an approval for the underwriter.
Right.
So
they see it as a risk, right?
Correct.
If somebody's not
transparent. And so transparency is key. Like, and that's what I, in my discovery call, I'll make sure like client, like, look, whatever you need to hide, whatever you need to like tell me, just tell me. Like, there's nothing to, everything is, it's my job to make sure I protect whatever your information. That's one of the things too. I make him sign a disclosure, like, hey, look, everything you shared to me is private. Nobody's gonna know about you if you went through a foreclosure or divorce or, everything's private information. That's, my job to make sure I respect the client's history, and that at the end of the day, my job is to make sure that you make it to your purchase safely or get the loan that you're looking for in the best way possible.
Yeah, that takes a lot of trust from your clients, right? To be able to disclose all that like confidential information and just fully trust you.
So that's the key. That's the key that I want to share people that in this business, especially in the financing, having somebody that you can trust is very key. Because not only when you first do one transaction, you'll feel happy that you find somebody that is in your team. Like I'm in their corner, helping them get the loan approved. They can also feel comfortable in sharing me that information. That some people are. That's why they're scared. They're scared to sometimes go to the bank and be like, hey, well, this is what I'm going through, and like you don't even know who's the person behind that desk, right? That's why I'm creating my brand, sharing people who I am. I have personal experience myself in real estate, doing multiple transactions. And so I'm as transparent as possible so they can feel trust within me, and that I'm going to make sure that I'm going to protect their file, their information, and making sure that at the end, they're guided through the whole journey in a protective way without any risk.
Yeah, and at the same time that they give you all the information you need for them to be approved.
Correct.
Right?
Yes.
Yeah.
And then that's the key thing that I emphasized at the beginning, like transparency is key, Even if, something bad happened, like let's not be shameful of sharing that. Like at the end, there's ways around it. There's letters of explanation, like, hey, I went through this. And I do that for clients because when things pop up, they're like, okay, well, the bank needs to understand what happened. Why did this late payment happen? Oh, some was through, they went through unemployment. Even if you went through unemployment, if you explain why you had this late payments, 3 or 4 times, then it's understandable. But when they see late payments on the credit report, they're like, okay, well, you're not paying your stuff on time. Like they just see you as a bad person. Like you're the bad guy, you're not paying. But if they see an explanation, oh, I went unemployed, and there's proof of that, then the story can make sense. And now we do an exception. That's what it is.
Right.
And so those are the key things that at the beginning is always good to know, because it allows me to anticipate what the underwriter is going to think and see when he sees this. Right. And I can prepare in advance to be like, hey, look, this is what happened. I guess he is aware that he had late payments, but this is what happened. And then once he sees this, they're like, okay, cool, makes sense. Let's proceed. Let's do an exception, and we can get an approval. So. And
you have your own intake process for all that too, right?
Yes.
You have something where you're checking off all the boxes that you need to make sure?
Correct. So now I've built my website where basically there's an intake form, and pretty much just preliminary questions. Mm-hmm. Really is a screening, And then after that, I would get in a discovery call. Really, and the discovery call is really when I want to hear from them to tell me like, hey, all like if anything happened, right? Like, did you have late payments? Share me the stories so I can take notes. And that way, when I put the file together, I make sure I include those things when we submit the application, and that way doesn't pop up later down the road. Right. And so yeah, I try to mitigate a lot of the risk factors. And that's one of the key differences of what I do. I just want to submit any loan, and then and kind of be the reactive. I want to be proactive. That's the way I like to operate.
Yeah, it's strategy, right?
Strategy, correct. Yeah.
So thinking about strategy. Next question. You talk a lot about leveraging strategically. So what's the difference between using debt to build wealth versus becoming trapped by the debt?
Yeah, so a lot of people have this confusion of debt. Yes, like accumulating a lot of debt could for some people be overwhelming. I myself at the beginning was like, wow, when I first took my first mortgage, I was like, this is a lot of money like I'm responsible of. But you start seeing like the rewards of it, especially if it's in real estate. I've met a lot of mentors that have become very wealthy. And regarding wealthy, it's accumulated wealth. Like they own a lot of properties, they have equity in them, and they are generating cash flow from it. So in a way, they've created a business too from it. And that's through the power of leverage, of knowing how to leverage the banks correctly. And where, for example, most of the investors that I deal with, they buy properties and they have tenants paying the mortgage. And so with this business model is how, leveraging makes sense. At the end, like when I tell people, like especially the clients that are cashing out equity, they have homes that are free and clear, either personal or investment homes. And I analyze their deal. I'm like, look, you can take $200,000, $400,000. And they're like, well, what can I do with it? Like, why would I take, they ask me, why would I take a mortgage and start making more payments on it? I'm like, well, you're thinking about it like if you're going to pay for it. But the idea is that you have other people paying for that mortgage, And right now we're in a housing crisis. Mm-hmm. There's not a lot of, especially in Houston, there's a lot of people moving into Houston and not enough housing available for them, especially also affordable housing. And so there's a gap and opportunity there for investors to basically leverage their equity, buy a small property, provide housing for a single mother or family that is looking for a home willing to pay $1,500, $2,000 a month in rent, and that covers your mortgage. And then once I break that down to them, they're like, okay, makes sense. Like, I got, $200,000, I bought this house, and then a tenant's paying it for me. And I get to cash flow maybe $300 or $400. Oh, wow. When I break that math to them, they're like, okay, this makes sense. And then also there's an appreciation value. The home starts appreciating, so you start building wealth. And also, if you have another business or you operate a business, purchasing that real estate also is a tax benefit. Oh. And so, good to know. Yeah, so there's different strategies and tactics of why people, leverage debt to acquire more property. Right. And that's one way. And another one is, especially the clients are cashing out equity. When they cash out, that money that you get is debt and is tax-free. So like the client I've basically done 2 transactions with, she's almost like $900,000 total in cash out that she's basically received. All that money is tax-free. And so you can use it to buy more real estate, or you can invest it into the stock market, or you can do whatever you want with it. She's still paying, so it's not that she just received the money and it's for free. No, it's money from that she received the loan from her properties that she had accrued over time. Okay. But she still has to pay it every month. Okay. And so there's still a mortgage now that is due every month. But there's benefits on how you can leverage that money. She's buying more real estate with it, growing her portfolio, and then that real estate is going to be basically paying off that mortgage for that loan that she got. Right. And so it's really, the idea for many people is this: they need to have a strategy expert next to them, guiding them on, especially the real estate, especially all the, here in Houston, there's so much like people with homes free and clear, and so much equity that money can be reinjected into the economy and help people flourish in providing more housing, more job opportunities. But I feel like there's a gap there. There's nobody's helping people how to like strategically use that, and only the business experts, like in real estate, they're the ones who know these tactics and they leverage them for themselves and profit from it.
Yeah.
But then the average community that work hard, has their job, has paid off their home, now they have all this I'll say abundance of equity, but they have no clue how to access it or even know what to do with it. Because I had a client like that. I'm like, I have 200,000. What should I do with that? And I'm like, well, you can do all these different things. And like, oh wow,
you're like this and this and this.
Yeah,
and this.
there's nobody showed up, offered
Right.
themselves to give them a strategy or an opportunity. So that's what I offer. I offer a free consultation. Like, hey, look, you have a deal, you have a situation. Let me look at it, and I can explain you. I can provide you a report. Like, look, this is what you can do, free, no commitment, and then explore the option. If it interests you, we can move forward. If you don't, no pressure. Like at the end, like I'm not pressuring anyone to take any type of loan. At the end, I actually want to analyze well their financial situation. To some clients, I tell them like, this is not a wise decision for you because they're in a tight situation. The bank might not approve them, so I'll tell them upfront like maybe this is not the best time. I want to make sure I'm also not promoting or giving bad advice either.
Right.
For me to try to get a commission or anything. Like I'm doing ethical business, making sure I'm giving the best advice to the clients that do and can leverage that.
Right.
For them to grow their portfolio.
Right.
And so
that's so fun.
Yeah, it is fun for me. Being in this business after leaving corporate world, like I'm problem solving. I'm analyzing different people's situations, and also just the cool factor is building the trust. You build trust with this client. They want to keep doing more transactions with you, because now that they shared all their information with me, I'm like, well, it's hard. As long as I keep my credibility, show them like, hey, look, I have everything, protected for them. There's no need for them to go with any other person, right? Like moving forward, any loan that they would like to move forward with, since I have all their information, I could process it pretty quickly.
Right.
And so that's one of the key things too, that when investors, this is mostly for the investors that keep acquiring more property, the process becomes much faster and faster. And my goal is also too with, now with innovation of AI and all these technologies, my goal is to make the loan process, even better every time.
Awesome.
Continues improving the process, because the loan process does take long. Right now it's between 2 weeks to up to 6 weeks. It all depends on the client,
right,
the bank. And so I'm trying to also find ways to optimize along the way.
Nice.
So.
Yeah, because it can be overwhelming, right? So it's great that you're making the
improvements,
making it easy, and the impact.
Correct.
Right, people are just sitting on these things without even knowing.
Correct.
And so thank you for educating us around this.
Yeah.
This is great.
Sure.
Let's talk about real world lending. What's one real example where creative financing or proper structuring helped turn a difficult deal into a successful opportunity?
Yeah, so this is one of my testimonies early on this year. The client basically went to the bank, to her local bank, and tried to get a cash out equity loan. Basically, she had equity on her property. She was like, hey, I want to cash out. But how many of the hurdles that most people have when they go to a retail bank, they're like, oh, you need this, this, and this, and this. And then she tried to submit it, and they're like, oh, no, you're just not approved. And she was unhappy. She was like, why? And then they were like, oh, no, you need more explanation. You need more, because she was trying to invest. And so they're like, oh, you don't have any investment history, that's one of the key things that I start seeing a lot. Like, well, how do you, they want you to, they don't deny you because you don't have experience, but then how do you get experience from, if you don't get at least the first one approved, right? So it's kind of doesn't make sense sometimes. And
it's
so
the entry-level jobs, I've heard about that.
Right, it's like entry level, but they want you with experience. So So yeah, it's kind of crazy. So she came to me and she was like, "Hey, I have the situation. I've got denied. The bank's not wanting to give me this cash out equity. Is there any way?" And so yeah, I explored the opportunity. I looked at the property. I looked at her income. I was like, maybe we could structure it this way. Basically, we converted her home. She had it as a primary residence. We converted it into an investment home. And then when we converted it as an investment home, pretty much the loan gets restructured and now to a commercial loan. And now there's less documents required. We don't have to look at her full income. And then we just look at the asset itself. And then what is she planning on doing with that money? Buying more real estate. I provided an explanation on that. And that's how we got the loan approved with the bank. Even though she had no experience cashing out equity, just because we restructured it this way, which the home is an investment home. She actually has another primary home. And that's the strategy that I was able to do, that because she did have another home that she moved into, and I told her, you have to make this your primary home now, like legally. Like, so she changed her driver license. This is her primary home. And then this other home, she made it as an investment home. She put a tenant on it, and she just extracted the money. And then now that's how we were able to strategically get a problem, a deal that was for a retail bank not financeable, because they saw it just one way, linear, and like, okay, this is your primary home, you cannot do it. I restructured it and converted it into an investment home, and doing that way, basically, we were able to do the loan. And so that was one of my deals that I got. It's where I showcased my creativity. The client saw that. Once we closed, she was like, "Wow, like nobody had ever told her that." She's been years trying to figure out how to get equity out of her property. And then just that restructure itself, opened access to what she was wanting to do. And so yeah, now I'm also providing that type of kind of strategy to other clients, just because it's a way that, how I said, I understand the bank's perspective. I understand how they get to approve a loan. And so now I can just apply that to a client that wants that loan approval. They're looking for cash out and things like that. Like, I can know how to structure it, and then and that's my job,
Nice. Is this so say she wanted to buy a house in a different state, can she do that, or does she have to stay in Texas?
No, so now you can buy anywhere. Yeah, literally, I know some investors that they don't even go to the property itself. They just buy remotely.
Wow.
Yeah, they just one of them, he's doing this business called Section 8. Which is like a government housing program. And in other states, there's houses for $60,000, $80,000, older homes like from the 70s to the 80s. But yeah, they see them online. They get a realtor to go look at it, video call. They walk through the property. They're like, okay, yeah, I like it. Submit an offer, and they get under contract and buy it, lease it, and rent it. And he never has to show up there. So eventually, that's a business model I'm exploring, but also, right, it's risky to many people are like, well, I'm buying something over, in another state. I don't know where's it at. But now with, the power of, the internet, the power of AI, you can do research on zip codes, neighborhoods, and you can find property, and buy it remotely. Like, you never have to, and now they have virtual notaries, so you never even have to go out there to the state and sign and close. Like, you just sign virtually. You verify
from your home.
Yeah. So yeah, the world's evolving, especially in real estate. We're gonna see innovation, and those who take advantage will reap the rewards. That's the reason why I like to educate more of the community here in Houston that has a lot of equity in their properties. Of like, hey, you should, and that they're thinking about their next generation passing things down, like extracting that equity, to help their sons or granddaughters, buy a home so they can continue growing their wealth. Right. A lot of people, basically, what I've seen is they buy, work hard, paid off their home, they have it paid off, and then they're trying to pass that home to their next generation. But usually that home's already old. The kids don't want to move into the house, and usually the parents pass away, and then the kids get the house, and then they just sell it or whatever, and they didn't get to preserve that. And so one of the strategies that I want to educate the community, especially the Latino community, is like, look, like, leverage your equity, cash it out, give it to your son, let them buy a house.
Right.
And even right now, like with the down payment assistance program, as long as you have good income, a stable income for 2 years, you don't even need it for the down payment. You could just give it to them so they can show reserves to get the loan approved, and then pretty much like you start building a family wealth, portfolio. And then when they pass, they can just convert that house into a rental property, and then that's how you start accumulating more real estate.
Yeah.
And so that's kind of one of the key things that just misconceptions of a lot of people. They feel like, oh, like not having debt is so risky, things like that. But if you structure it correctly, and have strategies and a plan behind it, my goal is not just to tell you. I actually give them a spreadsheet, a plan, like this is what the numbers would look like, and this is how it makes sense, right? The numbers at the end have to make sense. If not, like if the loan is too expensive, if the rent cannot pay for it, then then the deal doesn't work.
Right.
Then considering selling it might be better.
Right.
And so those are all the different tactics that I explore, and just want to continue educating the community. Like, hey, look, there's different ways, and to not fall behind, because we are evolving, and how said, frozen equity is just like an untapped source into our economy, and I feel like many people should be leveraging that.
Right, like not only creatively financing, but creatively buying property, right?
Correct.
How you can buy bigger property if you come together with other people.
Correct.
To house even more people.
Yes. So
Wow.
that's a new way too, that is called like fractional ownership, where you basically create an entity of multiple members, or like we call them liquidity partners.
Okay.
And they can come in together, I put 50 grand, and they can extract it from different assets that their family has had.
Right.
And then they can buy a multifamily unit, and then those are actually more lucrative right now, just because of the cash flow and the appreciation that can happen. And so anything, a duplex or fourplex, or even above from that, 6 units, 12 units, like anything with multiple units, it will be something good too, that you can have co-ownership with.
Right.
And yes, like you have to build trust with those partners, making sure that they have the long-term vision.
Right.
But I think once you get in alignment with that, then people can come together and create, buy more creative deals.
Yeah,
this
and
way.
I mean, you mentioned it in the beginning, right? How there's so many people moving to Houston, but there's not enough housing.
Yes.
So how can we strategically house everybody?
Yeah.
Right.
Yeah, and right now the way they're solving that is they're just building a bunch of apartment complexes. The banks are financing all of these builders to build all these apartment complexes, and yeah, like that solves some of the problem. But I feel like right now, not a lot of people even like to have the desire to live in an apartment. Eventually, they want to like have their own home,
Right.
or or have more space. The space is also for some people more enjoyable, less cramped, and so yeah, times are changing, and I think like for those who take advantage, now is a great time.
There's a lot of opportunity.
Yeah.
Cool. Okay, well, last question. If someone listening today wants to become financially stronger through real estate, what's the first mindset shift or action step they should take?
Yeah, so to look financially strong for basically an underwriter or somebody reviewing their loan profile, their key thing first is really their credit. Now that I've been in the business longer, I just see how many like emphasis is regarding a client's credit. Like if really any file that comes in, even on the investment side, like usually it's not so harsh on the underwriting process on the investment side, like to look so deep into the credit, but the score itself matters so highly. Like anyone below 600 is just like automatically denial. Like it's just like not a credit worthy client, maybe their foreclosure, collections, something caused it to go so low, and so very difficult to even get a loan approved with that type of very low score. And so I've learned that if a borrower is looking to get a loan eventually, maintaining a good health of credit score is so important. That would be one of the biggest emphasis. And then my goal will be the client to target at least a 700. Anything above that keeps you like in the good radar, the underwriter won't go so deep in trying to understand like if you had any lates or anything. Like basically anyone with 700 plus kind of flies on any loan pretty easy.
Nice.
You know, so that's B1. And then the next is really just having a great file put together, like pretty much an understanding of what do you do, like how do you make money, like your income, clear explanation. Oh, okay, I'm a W-2 or I'm a 1099. I have a business, and this is what I make, my annual revenue per year, kind of like an estimate of how much money you make per year. Like that has to be clear and defined. And most business owners, they're like, oh, well, my income is all over the place. Well, what have you filed, right? Like just show me your filing, and that can dictate, okay, I have an idea of how much you make per year. And the reason why that question is important is because the bank wants to know how much can you still afford the debt, like the mortgage. Like, do you make $5,000 a month, or do you make $10,000 or $15,000 a month, and can you afford a $5,000 payment, mortgage? That's kind of like the logic behind understanding your financial kind of like background, like how's your income, is it stable or not? And that's for both, for buyers that are buying a home as primary, and for investors. And the investors, we just look at it just to establish like awareness of like, okay, this client makes this much, but the underwriter's not dictating we call it on the primary side like a debt to income ratio. We don't have to determine a loan, get an approved based off that. That's the great thing about buying real estate as an investor, because you can really accumulate as much debt as you want. There's no limit. As long as you can show that you can service the debt with the income that you're making. Or if your strategy is rental income, that the tenant's gonna pay the mortgage. So it's all about the strategy for the investment world. And that's where like not that many people know how to do that. And so, and I wanna show people that the people that are scared or have never done it, like you can do it. It's not that difficult. And that's my goal, to partner with them as a consultant, show them like, hey, this is our routes. I can show them like how to be a landlord if they wanted to, step by step, and acquire more real estate.
Wow.
So
Great.
Yeah.
So becoming financially stronger. Anything else?
Yeah, I think credit, and then just showing good financial like stability. And then the last thing would be just your network. I think many people kind of fall short on that. Like the people that actually make you more financially like look better on paper. Recommendations can be great. And even, just having a network of realtors, lenders, just people that kind of keep you informed, like right now, like in this business of real estate is like, it's all about who you know. Like I went to this meeting yesterday and I met, two, builders right there, and it's just being part of this networking, group that I'm part of.
Yeah.
And so yeah, it really is your network and can make you look financially better, as an investor, as a primary owner, like, and so building your network, getting more people familiar that are in the space of real estate, getting associated with them, and even if you're new, being vulnerable to say, hey, I'm new, like, and in this space, there's the great thing I like about real estate is that really everyone can kind of create their own business, their own way, and like, there's really no competition. Like, there's an abundance of real estate all over that nobody's fighting for real estate
and all this untapped equity.
Yeah, or fighting to try to get all the equity out. Like, there's millions of citizens here. Like, I cannot service all of them. So
please help.
Yeah. So there's business and there's room for everyone. That's what I'm trying to say. Like, so nobody's gonna like, because that was one question that somebody asked me. Like, don't you feel like you're in a like saturated market, like where a lot of people are doing real estate? And I analyzed that question. I'm like, really, this is not really saturated. Like there's an abundance of it. Anyone can do it. You do have to have some strategy behind it. But even if you don't, that's the goal of associating yourself with others, partnering with others, people that are experts. And so that would definitely, how I said, for a client that works with me, just because they work with me and the way I structure it financially on paper, when we submit the loan, they look better
Right.
than if they were to just submit it themselves.
Right.
And so that's kind of what I mean, like building your network, associate yourself with experts, and that could definitely increase your opportunity to buy your first piece of real estate or eventually grow your portfolio.
Right.
Yeah.
So speaking of getting to know somebody, where can people find you? Where can they connect with you?
Yeah, so they can find me in
what's that?
Instagram at Julian Funds It. Basically, that's kind of like a tagline that one of my clients kind of put me. They were like, I figured it out and I got it funded, so Julian Funds It, So yeah, that's my tagline. And then I'm gonna be on YouTube as well. So a lot of this content will be on YouTube. And also, I have my website coming soon. It's gonna be blueprintcapitaltx.com. There you can see basically, to get onboarded, schedule a call with me. I do give free 15-minute consultations. We can meet in person, we can do a phone call, or we could do a Zoom call. Ideally I want to do a Zoom call, just get to, you don't have to drive anywhere. We just meet virtually, get to know kind of your situation, and then just start planning a strategy. The idea is in this game of real estate is not like you're buying a car. It's not a on the spot, like, oh, I'm gonna get approved right away and like I'm gonna get the car and walk away with it. No, it does take time and process. And I think those that plan accordingly in advance can be very prepared and then accomplish what they're looking for.
Yeah.
So
we covered a lot today. We covered how to get prepared.
Yes.
How important trust is. How to not be afraid.
Correct.
Right, to invest and look for things, and like you might never know if you can buy a new home soon.
Yep.
And just the importance of networking. This is actually something I said to my daughter when I was dropping her off at school this morning. That it's not only who you know, it's how well you know them.
How you well you know. Correct. Yes.
Especially in business, especially in real estate, especially in like life, right? But definitely if you're growing a business, if you're looking to invest, which everybody should, I definitely think that the Latino community doesn't get enough education around this. So thank you again so much for doing that.
For sure.
And thank you for this conversation.
Yeah, thank you for having me here. Thanks for the space, and looking forward to the next episode.